Hi, everyone. Welcome to part three in the four-part series, How to Lose Money on Cannabis Stocks. This is the F5 problem. Remember to stick around to the end of part four, where we're going to have a form of resolution for these four pitfalls that so many new investors fall into. Trust your gut. This is really good advice in many areas in life, in almost every area of life. However, when it comes to investing, this could be perhaps the worst advice you could get and follow. And I see this so much with new investors when asked about their reasoning or their rationale for their moves or why they bought the certain company. They say that they went with their gut feeling. They just had a feeling about it. They just liked the company. Maybe they bought a product from the company and said this is a really solid company. This is a huge mistake, and this leads to the F5 problem, and it leads to so many other problems as well. So let's take a look at Namaste. So Namaste is a stock within the cannabis sector. They do vaporizers. So let's just say that you just had a gut feeling about this company. You just wanted in, you liked their products. They've got 23 e-commerce sites. They've got really good traffic. They've sold a lot online. And to be honest, maybe you didn't even go that deep into it. You just like the look of their product or even their logo. So you went in, you invested, and you went with your gut, but you had no plan. You didn't research it enough. You didn't do your due diligence, and you didn't come up with a plan on when you would buy and when you would sell. Again, you just went with your gut. And so this leads to the F5 problem, because now you're at the mercy of the crowd. You're going to be refreshing your keyboard every 5 minutes. And when this thing starts to go down, you're probably going to panic because you don't have the proper system in place for making decisions that are not based on emotion. And we're going to get a lot deeper into investment psychology in later videos, but this is really an intro to the kind of emotional stability that is required when making trades, when making investments. So everyone, I think, at some point in their life has done this before. I've done this before. It's an awful place to be when you are, you buy something at 20 cents, maybe it goes up to 23, you get really excited, but then it goes down to 22, 20 and a half, 18, 17, and the ship is literally sinking. So there's this idea, I think, that goes through people's heads when they trust their gut. And that idea is the ship is sinking. Let's get off of it before I lose everything. This is usually a mistake, as markets do fluctuate. And again, any decision in investing that's based on emotion is not a good decision because it's not repeatable. You want to create a system that is repeatable, that has some form of math to it. And we're going to dive so much deeper into this later on. Do not abandon the ship. Do not panic sell because you went with your gut and now your gut's telling you something else, because now all of a sudden, the only people who should be looking, every 3 seconds at the stock are people who are well-versed in technical analysis. And as a new investor, if you're just staring at the screen, stressing out and obsessing, over time, you're going to make a poor decision. And that's why 90% of people fail at not only making money in the stock market, but predicting and trying to time the market. So like and subscribe to this video. Thanks for watching. Stick around for part 4 coming up next, which we will have the solution to these 4 problems at the end.